Welcome back to the show. Today, I'm joined by Chris Hernandez, founding partner at Strategic Capital. Chris works closely with clients on long-term financial planning and investment strategy, particularly for individuals and families who want a thoughtful, fiduciary-driven approach to manage wealth. Chris, really glad to have you here.
Thanks for having me.
Awesome. So before we dive into strategy and growth, I want to start with your story. Because you entered the financial world at a time when most people were running the other direction. You began your career in financial services around 2008, right as the financial crisis was unfolding. This is about as intense an entry point as you can get. What was it like starting in the industry during that period when markets were unstable and trust in financial institutions were shaken?
It had a really profound impact on the way I thought about money. I joined in October of 2008. So Lehman had just gone out of business. Bear Stearns had gone out of business. Bank of America purchased Merrill Lynch. So I'm seeing these institutions that people, that thought would be around forever go down. I'm seeing people that are losing half of their money. And it was just a huge impact on sometimes people care more about their money than the rate of return on their money.
Sure. And how did it shape the way you think about advising clients today?
That just always stuck with me. So for my clients that are younger and have longer investment horizons, we have those conversations, but not as much. We understand that they may want to be more aggressive because they have more time if they need to weather some downturns in the markets. For our clients that are approaching retirement or in retirement, I bring up OA often to say, hey, we've seen it, 2008, 2001, markets losing half of their value. We don't want you to be in that situation if that were to happen with something that's out of our control. And I think that clients really take to that.
Absolutely. So many advisors start inside large institutions that focus heavily on products and transactions. But over time, you moved towards a more independent fiduciary style approach and eventually helped build Strategic Capital. What was the turning point when you realized you wanted to move towards a more client-centered model?
Well, I became an advisor in 2008. Prior to that, when I was in college, I knew I wanted to become a financial advisor. So I got my finance degree. My junior year of college, I interned at Merrill Lynch to see how the wirehouses worked. I was told that people only need stocks and bonds. And I was like, yep, totally makes sense. My senior year of college, I started working at Citibank as a personal banker, knowing the next step up was to become an advisor. But since I was on the banking side, I was told that people only need money markets and CDs. And I was like, okay. And then when I got recruited to become a financial advisor, I got recruited by Guardian, which is a life insurance company. And surprise, surprise, they said people only need life insurance and annuities. So it really became clear to me that depending on where you worked, that's the type of advice that you were going to give. So in 2010, I transitioned over to the independent space and joined an independent broker dealer. I wanted to sit in front of clients and say, what do you need help with? What are you trying to accomplish? And what are your goals? And now, because I'm on the independent side, my toolbox is rather big. I can help you do that versus my past experience, where it was like, I work here, so these are the solutions I can offer you. It was really limited. And then in 2021, we transitioned from the broker-dealer space over to the independent registered investment advisory space, RIA space, just to get access to more tools. So from that 2010 on, we felt like independent was being important. Since 2021 and going true RIA, now our toolbox is even bigger and we're really able to sit in front of people and say, how can we help you?
Great story, Chris. And what does acting in the client's best interest actually look like in practice, not just in theory?
So everything is centered around the client. When we're in our meetings with our clients, we give an introduction to the firm so they have a clear understanding of who we are, how we help, our philosophies. We cover our fees, make sure there's never any surprises. That usually takes 10 to 15 minutes. And then after that, the remainder of the time is learning about the clients, finding out what they're trying to accomplish, just diving deep, not saying what kind of accounts do you have, but what's the purpose of the money? Once we're able to get all of that information, we have a planning meeting where we put all of that information into the plan, and then we look for efficiencies. So we will run out mathematical models. And if we can't put the client in a better position, we literally won't make a recommendation. To us, we have to mathematically prove we're putting them in a better situation than they were before, or they won't even know because we won't bring that recommendation up.
Chris, that is refreshing to hear. And financial services is one of those industries where referrals dominate. Trust drives everything. Most firms grow because one client tells another. From your perspective, how much of growth in the financial services still depends on referrals and personal relationships?
I think it all comes down to personal relationships, especially with AI and everything that's happening with the technology. I tell my business partners, we're never going to out technology the technology. So we really have to focus on those relationships. We do bring AI into the firm. We utilize it. It's helpful. So we feel like the clients are getting both, are the best of both worlds. They're getting, that information on the AI side, but they're also getting that personalized service where they can call in, they can talk. I can't tell you how many of my meetings if they're an hour long, 45 minutes of it might just be talking, catching up, hanging out, and then we do 15 minutes of business. So to us, that personal relationship's the most important thing, especially in this new world we're living in.
Absolutely. Have you ever experienced periods where referrals slowed even when performance stayed strong?
Yeah, I think that happens often just because for a variety of reasons, people may or may not want to refer. I know sometimes out of fear, they're just like, well, what if I refer someone and they don't do a good job? How does that look on me? So for us at our firm, we don't really count on referrals. We're constantly marketing. We are constantly in front of people because, I don't know, just empathizing with other people. What if they love us, trust us, but don't want to send a referral? So we don't really count on referrals. We are thankful when they come, and we do our best to service them and make sure that the original person that referred hears from the person they referred, just to get some feedback of saying like, oh, thank you for that connection. So we'll try to coach in that way so people maybe feel more comfortable referring, but it's not something that we live or die by.
Okay. Well, let's talk about strategic capital specifically. You've built a team-based environment focused on long-term planning and collaboration. What does growth actually look like inside your firm today?
So we partnered with a bigger registered investment advisory firm named Waterloo Capital. We joined them in 2021. And thanks to the alternative investment side that they have, the public markets side that they have, it's allowed our firm to grow pretty rapidly. And I think the reason for that growth is that team approach that you talked about. It's everybody's doing their specialty. Our alternatives team, all they're doing is sourcing alternative investments for our clients. Our public markets teams aren't in meetings every day. All they're doing is honing their craft and trading. My team, we are constantly talking to the clients and making sure that they feel taken care of. We have Adam Diacherno, who is our director of business planning, and all he does is focus on working with businesses and helping them out, whether they need a 401k or defined benefit plan. So in our firm, everybody is sticking to their specialties to just make a better product for the clients. And I think that's just kind of showing through the success that we're having and the clients feeling taken care of.
Okay. What challenges showed up as the firm expanded?
Capacity was one. We did have to implement minimum investments. What we're doing to help with the capacity level is we recently brought on a new advisor, Isabella Richard. She graduated from LSU, got introduced to our firm, and we just felt like this was the time to bring her on and start building the firm to be able to help with that capacity issue and make sure that our clients are always feeling taken care of. So I was kind of excited to not only grow as a firm, but also bring on more people and grow the firm.
Okay. Something unique about financial services is that you're dealing with a deeply personal decision: money, retirement, legacy. What do clients really want when they come to you?
I think they want clarity. I always say money is both logical and emotional. So
Mm,
they want to be able to talk to us and let us know what they're feeling on the emotional side, and then help us bring in the logical side to make sure that they're making good decisions. Sometimes people need an accountability partner where
mm,
they know what they should be doing and they have us to just, check in, make sure that they're doing what they should be doing to hit those goals that they have. I will say everybody is different. Everybody has different situations, different goals. So it's customized planning for the families
mm,
or the individuals. So a lot of times we're just listening to them. What are you trying to do? And then how
mm.
do we bring in the tools to help that get done?
Okay. What mistakes do clients commonly make when selecting an advisor?
A lot of times they don't have a few interviews with different advisory firms. We get Googled quite a bit. We have over 100 five-star reviews on Google. So we're meeting complete strangers a lot of the times. So after we give them our introduction, and we'll ask them, have you met with other advisory firms? And if they say no, we kind of end that meeting right there with the advice of go interview two or three more firms and get a feel. I know at our firm, we're looking for long term connections. So we want people to feel comfortable with us. Of course, we have to build that trust to get to that point. But interviewing a few other advisors to get a feel, see who you click with, see whose philosophy aligns with yours. And that way you can jump into that decision knowing you've done some due diligence. You're not just like, oh, this is the first person I see and I'm taking them on.
Right. Right. And I love that approach to say, hey, go check out some other firms. And then because that there is shows your confidence and that you really want to establish trust with that client and that long-term relationship. So I love that.
Yeah.
So
Sometimes it's funny because people are like, wait, what? You want me to do what? And I'm like, yeah, go check it out. See
yeah,
what else is out there.
yeah, right. Let's talk about growth from a leadership perspective. If you looked at your business today, what tends to limit growth first? Is it capacity, talent, market awareness, lead consistency? What would you say?
Yeah, I think it's probably just getting in front of more of the type of clients that we've worked with. Uh, I don't know how this happened, but maybe being in Austin, Texas, which is a pretty tech-centric hub, we're finding
Mm,
ourselves work with a lot of the employees at Apple, Google, Meta, Nvidia, and they have some unique situations, usually with their compensation through RSUs, restricted stock units. So we've found ourselves kind of working in that market more and more, getting referred out to other tech professionals. So I think that is a place that we really like being in the industry. I think that specialization is important because they do have some unique situations that they need help with. So just kind of probably getting in front of more people like that. As far as the infrastructure goes, which you kind of brought up different things, through Waterloo, the infrastructure is solid. We can always take on more capacity. We're just trying to do it with the people that we feel like we can help.
okay. Chris, financial services has changed dramatically over the past decade. Technology, transparency, regulation, and client expectations. What shifts are you seeing right now advisors need to pay attention to?
We came from the broker dealer world where we were probably one of 8,000 advisors, and the products had to be suitable for all 8,000 advisors. So I know in those COVID days, early 2020, a lot of people were moving from California to Austin because we ranked highly on Google. Those people were reaching out to us. We were
Mm,
putting plans together. And when we would present, they would be like, where are the alternative investments? Where's the private equity? Where's the private debt or hedge funds? And we just literally didn't have access to it through the broker dealer. That was one of the reasons why we made the change to Waterloo. Since we've come to Waterloo, I am seeing that more and more advisors are seeming to kind of leave that broker dealer space and find the independent RIA side. It seems like that's a big transition in the industry that's happening just because we have access to more that the clients want. I don't know if other firms, because I'm kind of deeply into mine, but doing what you say you're going to do for the clients, I think is also
Hmm.
huge. I just sometimes, or I get feedback of like, wow, you said you were going to do that and you did it. And that's something from a leadership standpoint that we try to just speak at the firm. And what I was talking about, like, hey, if you say you're going to do something, you just got to do it, or don't say you're going to do it. And that's just what we try to preach inside of our firm.
Okay, great. And how is client behavior changing?
Well, we kind of live in that Instagram world. Everything's instant gratification. So if people are calling, they expect calls back sooner when they want to meet. Like we'll get a call from Google from a stranger and they're like, well, can you meet today or tomorrow? So we've had to change our processes a little bit to make sure that we are reacting faster, reacting with better information, and then just being able to meet people where they are, because that's where everything else is in life. So it's either we adapt and adjust to them or we fail.
Okay. And this kind of goes into the next question, which is what mistakes do firms make when adapting to change?
It seems like firms aren't adapting as much or as quick with everything that's changing. And I know I keep harping on Waterloo, but we're just really proud and thankful that we do work with a firm that is adapting as things are changing. We had a client that uh, she had lost her husband, never really managed any of the money. So when she came to us, she had about $5 million sitting in a Wells Fargo savings account that was earning 0.05% at the time. She was not ready to go from a savings account into the market. It was just, that was too big of a leap for her. So we talked to Waterloo and said, hey, we don't have any banking options and we need some. And about a week later, we were able to partner with a company called IFI, and they helped us create a money market account that at the time was paying 5% because interest rates were a little bit higher than they are today. And the way IFI was structured, they were able to FDIC insure the money up to $100 million. So we were able to take her from 0.05% to right around 5 and still have FDIC insurance on the money, which she wasn't getting at Wells Fargo because it was only up to the 250 limit. So just that was a way to say like, hey, we had a need and Waterloo was able to help us.
Okay, great. I love to hear the stories, and that's a good one. And Chris, looking ahead, if you zoom out over the next year or two, what opportunities excite you the most in the financial services space?
I think the average age of a financial advisor right now is mid to late 60s. So I believe that they'll probably start looking to exit and retire, just like they've helped so many people do. So I'm excited of the opportunity to hopefully go in and start on maybe taking over people's books to help their clients out, make
Hmm.
sure that the clients are still taken care of. And then that's one thing. Two, I think Bella just finished college last year. So a younger advisor, super excited to help her in her career, have the team support her and kind of see how that goes, and then start bringing on more and more younger advisors. So as these more experienced in age advisors begin to retire, we have this new younger workforce coming in to help more people.
Okay, and that really dovetails into my next question, which is what advice would you give advisors entering the industry today?
It's going to be super tough, and just be ready to work. Like I've been in meetings before when I hear advisors recruiting other advisors and they're just telling them like, "Oh, you're going to be a rock star and do all of this and do all that." And then 3 years later, or sometimes sooner, the person fails out of the industry. It's a
Mm,
super tough industry. So just know that if you really want to do it, find a good team that will support you and help you accomplish what you're trying to accomplish, and really be willing to put in the work.
okay, great advice. Chris, this has been a really insightful conversation. But
I
before we
appreciate
wrap,
your time.
thank you. Thank you. It's been fun. Before we wrap up, for the listeners who want to learn more about strategic capital or connect with you, what's the best way for them to reach you?
So we pop up a lot on Google. So if people Google Strategic Capital, Austin, Texas. Like I said, we have over 100 5-star reviews. So if you want to read what people are saying about us, what our clients think about us, that's a good place to start. And then you can just connect with me right through there. All of my information's on that Google page or our website.
Okay, great. And for our listeners, at the bottom of this podcast in the description, I will put Chris's contact information and website URL. Okay. Chris, thanks again for being part of this conversation. I really appreciate you sharing your perspective.
I appreciate your time.